Well, you may have noticed there's a lot of interest lately in self-directed IRAs. Yeah, there's a couple of good reasons for that. On today's show, I'm going to give you 10 reasons why investors are now seeking self-directed IRAs more than ever before. Hey everyone, welcome into the show. I'm Clayton Morris, longtime real estate investor, founder of Morris Invest, which is a full-service rental real estate company. And what's interesting about the self-directed IRA, it's a method, it's a tool that we've talked about extensively here on this channel. You can check out all of our videos and series on how well this tool actually works. Right now, there are a number of reasons that so many people are going online trying to find out about self-direction. I mean, just look around. Look at what's happening right now in this broader economy. So right now, I want to give you 10 reasons that people are seeking self-directed IRAs. Number one, look around. What's happening right now? We, of course, had the election season, which just wrapped up and still kind of contentious and crazy. We have this pandemic. We're now seeing upwards of 123,000 cases per day and more and growing. So you think that that might have something to do with the uncertainty in the market? Absolutely, because people want a sense of stability right now, especially with regard to their money and their future. The market is extremely volatile, and with self-direction, you can control your investments. I've been saying this about the stock market for the past couple of weeks. It is overinflated. Just look at Warren Buffett. He sold billions in stock recently and starting to buy real estate, gold and silver. His own Buffett indicator, which shows you how much a company is worth, shows you how overinflated the stock market is right now, with companies that are upwards of 70 to 80% overvalued, meaning they're taking on so much debt, they are not able to pay it back. They're not even hiring new people when they've gotten bailout money or investing in research and development. No, what are they doing instead? They're buying their own shares back, thus artificially inflating their stock. So Wall Street will get rich. Right? And those day traders that sit there with 30 screens in front of them, they will get rich. But the people with a 401k, the people that invest just casually in the stock market, they will get screwed. So that's why so many people are moving their money out of their 401ks under the CARES Act, moving it into self-direction so that they can invest in gold and silver and real estate. Number two on my list is the CARES Act. I will say it again. You have now until the end of this year, 2020, to take advantage of the CARES Act, to actually take money out of your retirement account and move it over into a self-directed account. You should act now before it's too late. The government gave you a great opportunity to take this money out of your retirement account without penalties and moving it into a self-directed account that you can buy rental real estate with. Number three, side note, 70% of Americans don't have enough to comfortably retire on, and 75% of Americans are behind on their retirement savings. Just take a moment to digest those percentages. Okay, so let's think of the market providing one of those streams of income, just one, and not even a steady one either. It's a fluctuating one. With real estate investing inside of your self-directed IRA, you're actually able to achieve 3 streams of income. You get appreciation, right? The house is appreciating. By the way, if we think about the rate of inflation in this country, around 2%, right? So that means the value of money is going down, okay, every day. You put $1 in the bank, you're losing money on that dollar because of inflation. Now, real estate has always been a hedge against inflation. So if 2% inflation right now, and your property is, conservatively appreciating at 4%, just owning the property is a hedge against that inflation. Then think about principal reduction as the second stream of income. So as a tenant is paying for the reduction of your mortgage, that is an income stream. You're not paying that principal reduction, your tenant is. And then of course, third is cash flow. Let's think of 3 versus 1 in the stock market. That's the beauty of this model. Number 4, have you looked at your statements for your current retirement accounts? Are you aware of all of the hidden fees you're probably paying in those accounts? I implore you to take a closer look. There's a website you should check out that will show you the hidden fees in your retirement account. It's called feex.com, and we will have a link below in the description. Number 5, investors are now rolling over to self-directed accounts to lower their risk. That's right. With our self-directed IRA program at my company at Morris Invest, you're lowering your risk and hedging against inflation. You're actually obtaining a superior asset like a new construction duplex or a new construction single family home that a bank has already approved for a non-recourse loan. So the bank has looked at that asset and said, wow, that property is cash flowing with a tenant in it. It's new construction in a demographically improving area of the country, landlord friendly state. We are going to provide financing on that. Imagine that a bank will look at that and basically give you a seal of approval before you ever even take advantage of that investment. Number 6 on my list, control over your own money. Doesn't that sound great? Not Wall Street taking advantage of your money. You earned it. Shouldn't you be able to direct it into an account that will help to provide a secure future? I love the idea of having a self-directed account. If I've got $100,000 in a self-directed account, I could use that $100,000 and invest 35 or 40 in as a down payment on a rental property. Take another 40 and do the same thing. Pick up 2 rental properties inside of my IRA that are cash flowing $3,000 a month. Imagine that. I can control that. Not Wall Street, not my 401k provider. Number 7 on my list, potentially lowering your tax bracket with contributions to your self-directed IRA. That's right. Every year, my 3 kids, my wife and I always put money into that self-directed account. Therefore, that lowers the amount of taxable income I'll have to pay Uncle Sam. And all the while, that money is then sitting in that account growing and growing and growing. And that passive income is growing tax-free. No wonder they're taking advantage of this. All right, number 8 on my list, IRA financing, aka non-recourse financing, is already in place on new construction properties. Seems like a no-brainer to me. So you can actually use your self-directed IRA, pick up a rental property with non-recourse financing. So that non-recourse financing is not even tied to you personally. We have a whole video series on non-recourse financing. Check out the card up here if you want to learn more about that. Now, speaking for my company, number 9 on my list, we are able to set up a self-directed account for our clients within 10 minutes. We've been able to set up this seamless process to assist those individuals ready to take back control of their money. All you need to do is just book a call with our team. Just go to morrisinvest.com, set up that call, and within a few minutes, we will be able to set up your self-directed account. And number 10 on my list, lastly, the power of customer service. Individuals are looking for that guidance and that personal approach to help them feel comfortable with their investments. Stock market investing doesn't seem to provide that type of follow-up and that customized approach. We do. Morris Invest will stay with you and continue to help plan and develop your path to financial freedom. So take advantage of this today. All you need right now is to book a call with our team. We'll have a link below. Go to morrisinvest.com. Right there on the front page is the book a call button. Jump on the phone with us for 30 minutes and we will help you through this self-direction IRA process. Super simple. We'll see you next time, everyone.